Have you ever analyzed the market and the market retraces back into your point of interest or almost reaching your points of interest, and you start feeling the market might not touch your point of interest? You jump into the trade, or the market will just touch your points of interest without any confirmation, trade confirmation, and you just jump into the trade because you feel the market might leave you. You think you have analyzed correctly and the market might leave you, and yet you were right. Welcome friends, this is the King's FX. Here, I'm here to guide you so that you can know what FOMO means, how FOMO is bad in our trading, how FOMO can delay our progress. There is this trade that I took up in gold. I was so hurt when I was not on the chart and the market touched my points of interest. I did not react. I thought maybe I've missed up the full move, but there's one thing that kept me down. I was waiting for the trade confirmation. Trade confirmation is very important to increase our win rate into the market. Whenever we have our trade confirmation, and then our confidence in the market increases, the probability is always above 0.5% of the trade working out. So basing on this trade that we took on gold, I've learned a lot of things out of them. One, my trade confirmation was met, and then I entered into the trade, not worrying about the big move that I was left behind, and I just increased my confidence. Throughout the week, I had two winners of a 1:3 and one losers in the price leg. So this is some big progress because at the end of the week, I ended closing up the week with a 5% profit out of my account. So with all that being said, let me guide you into my thought process in the market and why FOMO is so bad and made me to survive necessary losses. And at the end of the week, I had a winning week. With all that being said, see you on the charts.
So, as we were saying earlier on, we're anticipating price to come and break this high, which it failed to do. But instead, price came and broke this low. So, on breaking that low, we are saying if price broke this high, we were waiting for an opportunity to buy the market. But since we broke lower, that means price would come and enter into this. That means price, it came and broke this low, and currently I anticipated price to come and react either at this one, the first point of interest, or this one here. But now I was not observing the market so keenly. But now what we see here, it was a stop hunt. This is a stop hunt. So for traders who were waiting for this first region here, first point of interest, this one here, to take a buy, they were immediately stopped out. Now gold has finally broken up the recent high, which is this. This high was broken. Now since we have that market structure shift, we are likely to go for a long time bullish trend on gold. So how shall we enter in gold? Gold has its own entry strategy. So there's what we call break and retest. Now we have broken up this recent high in M30, because M30 is where I study my market structure. So on breaking that, we anticipate gold to have a little pullback to come and retest this region of supply. What am I talking of? Let me show you. This region of supply on this last bearish candle before the aggressive move, right? And then secondly, this week, this is what we call a weak rejection, a rejection block. So likely price could also come to that weak rejection and we also take the trade. So where is the best point to take the trade? To me, in order not to miss out the trade, I'm going to take it at that order block. So this is a long position on the bearish block, maybe in the middle. Fine. So my stop loss below, this is 85 pips. Good. 1:3. So 85 times 3, let me see that. 85 times 3, 85 times 3, that is 255. So now, as earlier on predicted, trading is a game of probability. I predicted that price would come into this region of supply after our break of structure to the upside. We're ready for the bullish trend. Now, there's one lesson I've learned from this. As always, a beginner trader will suffer from what we call FOMO, fear of missing out. We had missed out this nice entry at this point of interest, but we would have entered into this point of interest by an order block, but the probability would have been less than 0.5%. Reason being that we don't have any confirmation, but we just know that price will react from here. But our confidence increased on this position because price had already confirmed for us that we are ready for the bullish move. Now, after missing out this position, we waited for the break of structure. Now, I marked out my region of supply using this order block. Then what we saw, we were expecting price to move from up here to this point of interest, and then we take up the trade. So first thing first, we were like yes, what's up everyone? I hope all of you have been monitoring gold. Now gold, we had our first entry. There is what we call scaling into a winning position. Currently price has not yet hit our TP, which is okay because I'm very actually 80% about my probability that price will continue pushing upward. But now let us look at this. Price broke structure to the upside for the second time, right? Still on M30. Now on this M30, do we see an order block? Yes. So when we see this order block here on M30, we realize that this OB here, this bearish block before the aggressive move that made us break structure. So that should be our second entry for gold. So I took this trade earlier on before recording, just because I don't know, but it had already happened. So price tagged me in, and currently I'm entering from this position. My stop loss below this 66 pips, somehow big. Yeah, so price tagged me in. And where is my TP? Still here, 66. That is 122. Yeah, it's not bad, not bad. So that is it. My TP is still the same point, at the same point as this one here. Yes, so that is the second entry for gold. So let us hope price will hit our TP and see how the trade moves on. Now, yeah, I hope all of us are happy. Price has just hit TP. I woke up and yeah, we hit TP in our two positions. Now, I'm trying to get away of entering again in gold. You get that? We have not yet taken up this swing high. I've always been telling you that our main target is this high here. You get that? After breaking up that high, and we have a shift in market structure in these internal structures here, and then we shall start looking for shorts to halfway these positions. But right now, we are just looking for longs. Now, how shall we enter into our third position? Now, as always, we had an aggressive move that broke the structure to the upside. But what was the last red candle before that aggressive move? It is this one here. I hope you are all seeing that. This one. Now, on seeing that, begin on the day. Today is Friday the 14th. So you may go and backtest this same trade that we are taking live, so that you really see that this strategy works. So far we have, actually, to me, I had 3 winners in this trade, because the first one I took it here. Second, actually I entered 2 positions on this first point. Now this one. Now I'm trying to look up for this another position to see if price respects my setup. Yeah, and we see how the outcome. Now, not to miss out this trade, I will enter my trade from this point here. This point. Now, where will my stop loss be? Stop loss, if price breaks below this, we are done. But I expect price to respect that point. And then, where's our TP? For this time, this is like 70 times. That is 210. Should I take up this side? Should I go for a 1 to 2 or 1 to 3? Then first look at these things, swing structures, in case if there's any resistance. Now you observe this. We have broken out all the resistances. This was a rejection week that price has recently broken. So there's nothing that will stop price from going upward. You get that? So that means even though I'm to take my TP at 1:2, price will hit that. But why? If I'm sure that there's nothing will stop price. Let me take my TP at this point here. At this point, you get that. Take price at that point. TP. So, or at full take profit, how do you see? Here. Yes. So that is where I will take my TP. So this is a 1:3.3. So let us hope price will play out and we get tagged in into our position and we see.
If you find such content helpful to you, please like and subscribe to my YouTube channel so that we take this journey to the next step. And if you have not watched this video up on the screen telling us about the 3 mistakes that beginner traders fall traps of, please watch this video. It will help you so that you stop falling into the circle of doom and leave the bad thing so that you go on a direction that will make you prosper. See you on the next one. Peace.